Today, we're diving into metaverse taxation, the idea that digital assets are not just virtual, but are really becoming taxable.
Yep,
So there's a whole discussion around how virtual real estate, NFTs, even play to earn game rewards can be taxed.
absolutely. It's so fascinating to see a digital world turning into a taxable universe. And it's like, you know, when you purchase a digital plot of land, it's not just pixels, it brings up capital gains, VAT, and sometimes even value added scenarios, right?
Right? Exactly. It's like consider the digital twins and early metaverse ideas from Second Life back in 2003 to today, where tech behemoths like Microsoft and Meta are realigning for a future where digital interactions are commerce and business. And the tax
Hmm.
implications are immediately pressing.
Yeah, and one of the key pieces is the interplay of Web3 tech, blockchain, and decentralized systems creating lots of taxable events. It's almost a paradigm shift.
Right. You have tax authorities around the world, like the US, UK, Australia, imposing different forms of capital gains taxes on these digital assets. And meanwhile, places like China outright ban cryptocurrencies, and India is still debating.
Uh huh.
It's a bit of a regulatory Wild West in metaverse taxation.
Exactly. And even within the same digital ecosystem, like metaverse land, you're facing challenges that often leave both taxpayers and regulators scratching their heads. When you sell or rent digital real estate, there's this question of which jurisdiction gets to tax it.
Yeah, it's like if you sell a plot of NFT real estate using cryptocurrencies, should that be taxed as capital gains? Or should a VAT even come into play?
Right.
And the complications keep stacking up.
I mean, take the case of metaverse events like that multi day virtual concert. Remember Ariana Grande's Fortnite tour? Over 78 million viewers and a huge revenue stream. It's still not clear which country claims tax rights for that sort of income.
Oh, yeah, that's fascinating. It's like, um, where do we anchor the taxing authority? Is it where the event is streamed, where the audience is, or where the performer is actually based? The
Hmm.
jurisdictional challenges are numerous.
You're speaking exactly to how evolving digital landscapes challenge conventional tax rules. There's also the dispute between consumer and vendor location, especially um, within the EU's VAT framework for digital services.
Exactly, yeah. The EU VAT law for digital services and even for virtual events brings its own twist. For instance, if a digital service is provided, it's taxable where the consumer uses it. But if it's event based, then it's taxed based on where the event takes place, the physical location or the participant's location, which
Right,
is still up in the air for virtual events. And organizing such events brings a headache for event organizers.
for sure. And look, another interesting tidbit is how the US IRS now treats NFTs as digital currencies for tax purposes. That means NFTs earn a kind of double whammy. They're taxed like income and as inventory, and creators could end up owing self employment taxes on their NFT earnings.
That's a critical point. Creating NFTs isn't just about art and technology, it's a business with significant tax consequences. And you see in places like India, where NFT earnings have a flat 30% tax rate with minimal
Exactly.
deductions. It makes you wonder how sustainable these tax models are as digital assets evolve, doesn't it?
Yes, it does. I mean, we're still grappling with the idea of whether the metaverse should have its own distinct taxation system because the digital environment is just so different from physical entities. How do we really classify these assets?
Right? It's like, do we force fit them into existing capital gains taxation models or develop entirely new frameworks? And that question really multiplies with play to earn games. When you earn tokens and rewards from gaming, are those capital gains? Are they income or something else entirely? Plus, every
That's a
region
tough
seems to have
call.
its own interpretation.
Actually, I have to challenge one point here. If we always frame these earnings as capital gains, don't we risk oversimplifying the nature of digital labor and creativity? Sometimes these token rewards are more like wages for digital work, and taxing them as capital gains could be a disservice to the creators.
That's a really good point. I mean, the lines between earnings from digital work versus trading profits are so blurred in the metaverse. It's exactly why local tax regulations tend to vary, because they're not fully prepared to handle this new digital economy model. And that's why
Right,
engaging
exactly.
with local tax experts is crucial.
Great advice there. And aside from individual earnings, there's also the broader issue of taxing digital intermediaries. Think about custodians, wallet providers, and even the platforms themselves. The United States, United Kingdom, and OECD are looking to expand tax frameworks to cover these digital players.
Absolutely, yes. It's like we're restructuring tax systems to capture every feasible taxable event in the digital space, from a subscription fee in Second Life to a payment for
hmm
changing your digital name. Even the smallest transactions become significant at this scale.
And that extends to even more creative transactions, such as when a user rents out their virtual land for Ethereum-based income. That rental income can be capitalized and offset against losses, but it still triggers a taxable event.
Right, it's all interconnected. Plus, there's an emerging debate about whether the server's location or the physical residence of the seller should determine the tax jurisdiction. Imagine a scenario where the platform's servers in one country impose tax, while the user is in another country with different rates. It's a perfect storm for regulatory confusion. The
Uh-huh,
complications seem endless.
absolutely. And now the EU is tackling the subject with new proposals, especially around business to consumer digital transactions. According to these proposals, VAT would be charged based on the customer's tax jurisdiction for digital services. But if it's a business transaction, no tax would be levied on the virtual event at all.
Exactly, it's an important nuance. And while these proposals are promising, they're not yet finalized for implementation until about 2025. So, businesses are in a state of uncertainty right now. Navigating that
hmm
uncertainty will be a challenge indeed.
Right. And the same goes for tax on rewards from play to earn games. Given that there aren't specific instructions yet, most tax offices treat these rewards as capital gains or income, a move that might not capture the full picture of how digital economies function.
Exactly. And while some regions apply these taxes almost mechanically, it leaves room for tax evasion and, unfortunately, sometimes even fraud because of the loose reporting requirements in the cryptocurrency and NFT space. It
Right,
really
right.
underscores the importance of regulatory clarity going forward.
And let's not forget, these tax issues are not just about revenue for governments. They play a huge role in consumer behavior and investment in digital assets. When creators or gamers feel uncertain about the tax burden, it could stifle innovation.
Oh, for sure. It's like a double edged sword. On one hand, you want to tax digital ventures to keep it fair. On the other, too much complexity risks killing the entrepreneurial spirit in these virtual
hmm
worlds. It's all about striking the right balance.
And as technology evolves, so must our tax frameworks. What might be applicable today could become obsolete tomorrow, especially given the rapid pace of digital transformation.
Exactly. It's a continuous evolution. Tax authorities need to work together internationally to set some standardized rules. Otherwise, we're left with every country having its own interpretation of what constitutes a taxable digital event.
Right.
That fragmentation makes it hard for both users and businesses to operate in the metaverse confidently.
So, in summary, while the metaverse promises a fantastic digitally interconnected future, it also raises a lot of questions for tax authorities. The gaps in regulation, be it for NFTs, digital real estate, play to earn rewards, or even digital intermediaries, are still significant.
Mm-hmm. Exactly. And eventually, as the digital and physical worlds converge further, the effort to impose taxation will be not just about capturing revenue, but about ensuring fairness and clarity in the evolving digital marketplace.
Yeah,
It's
definitely.
a fascinating intersection of technology, law, and economics.
I agree. And while the evolution of tax policies might be slow relative to the rapid pace of technological advancement, the upcoming years are going to be crucial in setting precedents. It's almost like watching the Wild West get tamed, isn't it?
Absolutely, it's like watching a new frontier being mapped out. Every decision, be it on capital gains, VAT, or even self-employment tax on NFT earnings, shapes the future of metaverse commerce.
Right,
And with
exactly.
tech giants pushing for a digital reimagining of our lives, these discussions are only going to intensify.
And let's not forget, while some regions are quite proactive in this space, others are still catching up. It's a testament to just how revolutionary the metaverse concept is. The fact that a digital world is now subject to real world tax laws is pretty wild when you think about it, right?
Yeah, it's both wild and incredibly exciting. It forces us to rethink not only what wealth is, but also how we document and report it in an entirely new digital economy.
Exactly. So, with all these nuanced issues, what do you think the next steps should be for policymakers? Should there be a push for a global standard, or is it more a matter of regional adjustments over time?
That's a great question. I think um, ideally, we need some degree of international coordination, maybe through bodies like the OECD or other international forums, to at least set minimum standards. This way, we avoid complete chaos across borders, while still allowing enough flexibility for regional
Right.
nuances.
And a bit of caution, too. It's not like every digital asset is exactly the same. Some, like NFTs, might be closely akin to art, while others, like virtual lands, are more like investments. One size might not fit all when it comes to taxation.
Exactly. There's a subtle balance between uniformity and flexibility. Plus, the ongoing debate, like whether to treat digital work wages as income or capital gains, needs clear guidelines. This is where respectful discourse among experts worldwide can really help shape pragmatic policies. It's going to be an interesting evolution to
hmm
watch.
Definitely. And it's clear that as the metaverse matures, these taxation questions will only get more complex. But it also opens doors to innovative tools and approaches in tax collection that could eventually benefit everyone involved.
Absolutely. It's an intricate dance between technology and regulation. And while there's a lot to work out, these discussions are our roadmap to a more structured digital economy. Thanks for such an engaging chat. I always learn something new every time we tackle these topics.
Yeah, thanks for the deep dive.